for joining again for another real estate investment training. That's my passion. That's what I like to do. Not only informing other real estate agents, but also see what's going on with real estate investment. Even before I become agent, I was in the market for investing in real estate. So let's take it from here. All right. So the goal for all these trainings, webinars here is for you to learn more, to get inspired by other investors or people around you that are sharing the same passion, to build up your portfolio, build up your personality as a real estate investor. Now, this webinar is specifically for real estate investors, agents. So agents that are either wants to do it themselves or they want to take it to their clients and offer them this service to their clients, always. Now, another reason for this training here is to help others and repeat the very same thing until you build up more and more and more. So I'm in business with my associate for last 18 years, and we have developed different tools for audience, for people around us, and even real estate agents to take advantage. So this is one of my YouTube channel. There you can find a ton of information about real estate investment. For instance, if you go to one of the playlist, you're going to see a ton of previous webinars that I did with a lot of investors. These are investors from all over Canada, from Vancouver all the way to Newfoundland. Typical topics: fixer uppers, multiplex, U.S. investment, bear strategies, startups, buy and hold, private money, etc. So there's a ton of information there that you can find and learn more. I'm also running my mastermind Facebook page. This is specifically for agents, and on a daily basis, there are articles, there are tips, hints, information that you can go and take advantage. There are some of the files you can even upload and start using it. This is 100% free, and we all share the common same goals here is to success, not only in real estate, but in our family and running our life from different angles. So we already talked about mortgage update with Kim, and thank you very much, Kim, for sharing with us. Now let's get into real estate investment. Now, usually I also share what's happening with the market right now, but today specifically, we are going to talk about 3 practical ways to find and attract investors. Now, why with investors? I noticed with investors, the blood is a little bit different category. I mean, when you talk to them, most of the time, you are talking to more savvy person in terms of real estate. You're not talking to first-time home buyers. So when you talk to them, you can feel, you can sense that you're talking to different category of people. So these people are firm, they know what they're doing, and you can get regular business from them. Now, they understand real estate market, so you really have to know what you're talking about when you're talking to them. Some of them, when you talk to them, you don't need to start investigating, checking, find out what is the mortgage, what is CHMC, what is 10%, what is 20%, what is advantage, disadvantage. They usually know their business. And this is a strong repeat business. I have investors that came to me for the first home, bought the second one, bought the third one, fourth one. After a while, they start selling them off. So it is a better business for you if you get into that, because you not only buy for them, you can also rent it to the tenants for them, and also one in the future you can also sell it for them. Now, saying that if you are strong, then you can get referrals, which I did. I have clients that refer me to their cousins because Ashton is doing a fabulous job. He knows what he's doing. So this is very strong. We're not talking about, would you like me to buy a house, or what is your real estate needs? So it's different. And of course, they're not taking on your commission. Can you split the commission with me, referral, those kind of things? Is straightforward because their focus here is to make money. So, how to identify investors? Now, investors or so-called investors can come across every single day. Now, the typical example I always pick is around the barbecue. When you were barbecuing with friends, gathering together, you're going to see two categories of so-called investors here. One here is what I call speculators. These are the negative people, always like to make a noise around real estate, down, up. They're always screaming, looks super excited, but in reality, nothing comes out of them, and they are there just to make noise. So the common language they use is I wish, I hope, I guess. Very often I come across them, they said, well, when the market goes down, then I would buy a real estate investment property. To which I always, in a humor way, I said, well, so you're waiting for the house price to get to zero. And they understand what I'm saying. They said, no, they are looking at the bottom line. So when the market starts picking up, they said, damn, we lost that opportunities. We will wait for the next market up and down. They never, ever, ever buy a property. They are afraid of their own shadow. Now, the second category, I call it more savvy investors. I like to work with them. They know what they are doing. They are serious about numbers. They are serious about making money, and they are taking actions. So that's a good category I like to work with. Now, fundamentals of real estate investment. Okay, I'm giving you three fundamentals. Any objection you come across, if you have these three fundamentals in mind, you can always answer them. There's nothing else beside it. Here is the first one. Real estate is a long-term game. Well, my cousin bought a house and then a month after the market crashed, so he sold it and he lost $50,000. I don't like real estate investment. Well, to which you have to say, real estate investment is a long-term game. If you buy it today, but selling it tomorrow, then of course you will lose money. So always keep in mind, in average, we're talking about 3 to 5 years at least. Now, I understand there are different strategies such as flipping. You buy it today, within 1 to 3 months, you try to fix it and sell it, but that's different strategy. Most of the time with real estate investment growth and wealth, we're talking about buy and hold. There is another strategy called BEAR, buy, renovate, rent, refinance, and repeat. That also is a long-term game. Number two, real estate is not global, it is local. This is happening all the time. Well, look at this. The real estate price in Canada went down. Hold on a second. When the market is down in Canada, how come in Bayview area, the price of homes went up 20%? So we cannot generalize real estate. It's very much local. When the market is going crazy, you go to Jane and Finch, for instance, the price never went up the same as anywhere else you go. If you buy a house in, let's say, Oakville, Milton, you can easily get a growth value of 8% per year. You won't get that one somewhere else, such as Jane and Finch area. Real estate investment is not hobby. It's not racing against your cousin because he's buying 20 homes. You have to catch up with him. It's not a competition. It's not a gamble at all. So keep that one in mind. Anytime you come across anything, just keep in mind that you're not in the game. You're not jeopardizing. So I had calls from people who said we sell a land that we think we can buy today. In 10 years, we sell it, we make millions of money. Now, this is a gamble. This is a risk we're taking. And I asked them, do you know what is the growth value of that land per year for the last 5-10 years? What is the reason that you think that land would grow in value? Show me some numbers. And of course, there's no answer to that. So we're not racing. I had cases, my cousin in the middle of nowhere told me a house, said this is a great investment, buy it and rent it. I bought it, I couldn't rent it. One renter came, destroyed the house, didn't pay for 6 months. I hate real estate investment. Well, to start with, you did something wrong. You were trying to buy a hobby for yourself or racing with your cousin. So be careful for that kind of situation. So if you have these three fundamentals in mind, nothing, no objections is a real objection, Steve, because you have the answer to all of them. What the real estate investors are after. Show me the money. Okay, this is number one. Show them the return. And this is a very simple example. And I pick this example every single day. If I'm looking for a property for my clients, I'm looking at properties that can give me some answers of how much my client can make for. So in this example, let's say you find a unit for 420. I know this is a ridiculous price. We can find it in, let's say, St. Catherine. This is only an example. So as soon as you see 419, what you have to do as real estate investors agent is to quickly figure out. So it's always good to have a calculator with mortgage option in there. So you quickly check what is the mortgage for 419 if you don't want to call Kim. So you figure out what is the mortgage number for your client per month, tax and insurance. Insurance depends to the building, $50, $80 per month, not much. So quickly, within 5 minutes or less, you can figure out how much this property is going to be, have as expense per month. And in the MLS sheet that I picked here, it clearly said you can make 2,400. So quick number calculations in your mind, the difference is $200. So this is a positive cash flow. So if you present this kind of scenario to your clients, you can show them you are making money here. Now here is another example. You start from back. You start from what the rent opportunities is around. So first thing you ask them, what are they qualified for? Well, let's say they are qualified for $800,000. Then you figure out what are their expenses. Mortgage for 800, approximately tax and insurance, if these are the basic expenses for that place. If you buy a condo, of course, you have to put into your calculations the maintenance fee. Sometimes they use home equity loan, whatever is the amount. So it's always good to have that one, keep that one in mind as well. So figure out their expenses and find out what kind of rent can satisfy that kind of expenses. And then find out if they can make positive cash flow. And here is the money. You can show them the return that they can have every single month. And it's better to be positive cash flow than negative cash flow. Now, you're also here dealing with ROI. ROI basically is the net profit generated by your investment. And this example I gave you is straightforward. Let's say you buy $100,000 worth of a rental property, and that property net profit, not gross, net is $10,000 a year. Now, net profit divided by total investment times 100, we're talking about 10% ROI. Now, 10% ROI is a very healthy ROI. In Toronto, we're dealing with 5%, and 5% borderline is okay if the whole neighborhood is growing in value. If the whole neighborhood is going down or stay flat, then it's not worth it to go with 5% ROI. Now, we're talking about commercial in Toronto, we're talking about 4%. But again, if you buy a plaza, for instance, with 4% ROI, it's not bad because plaza is many places in Toronto growing in value very well. So a good scenario, 5 to 8% would be ideal, but 10% is really, really good. If you find something with 10%, you should jump on. Now, how to talk to your investors, have a one key solution for them. You're not looking for putting the deal together, putting the real estate investment pieces together to make them money. So you have to show them the roadmap. You have to tell them with the money they have here, what they can get, and how that property that they are buying would grow in value. Now, here's a scenario. If you buy a house today, let's say the growth is 8% per year, within 3 years or 5 years, the growth is so well in that property that you can take the money out of that property and buy the second one with no extra money from your pocket. So this is giving them a little bit of a roadmap, what direction they are going. Show them that it's safe. So by pulling out the positive cash flow, what they buy for, how much they can rent it for, and how they can operate it or have a management company to help you with that one. I had some properties in Kitchener-Waterloo. I wouldn't drive all the way there to open a blocked toilet, for instance, or something broke with dishwasher. I'm not going to drive 1 hour to Kitchener to fix that dishwasher for them. So it's always good for long distance properties to have a management company that is taking care of that property for you. So that becomes part of the equation. Now, if they are close by, what I tell them here is usually when someone's calling, good tenants call, say, listen, the AC doesn't work, you just grab the phone and call a repair guy, send it over, or to make it easier, which I do it all the time, I tell them, listen, if there is something that doesn't work, just send me a quick email. If I can help you, I would help you. Otherwise, just go find your own person, repair guy on computer. You can find it on internet. Call him up and he'll fix it and send me the bill. That's it. It's straightforward. And they 100% of the time they would. Now show them the growth. So this is one area that you have to use different tools. What I use very often is we call it home price index, and we have it that one for real estate investors, real estate agents. We have it online. It's offered to us by TREP. I'm sure different boards, they offer the same thing. And this is a very strong tool. So I'm not going to spend much time explaining to you how the home price index works. It's amazing, powerful tool for not only bring brand new investors into the market, but also how to convince what neighborhood is the best neighborhood for investing in real estate. And these are numbers. These are not emotion. I feel this area is growing. That's a wrong language. You have to say, based on the stat that you can see here, this area is growing 12% or 5%, don't buy anything. Or you can easily compare to different neighborhoods. So I'm going to next week explain in details of how you can use the home price index and how you can use it as a strong tool to get your client to invest in the right property. And remember, you are not pushing them to buy a property, you're helping them. So once you help them, they see the result, they refer you, and they're going to use you again over and over. Now, in terms of attracting investors, there are different tools you can do that. One of the most common one here is all gathering. When you get together for a dinner or barbecue or parties, you can open a conversation. Don't be too much. Don't vomit investment on them all the time. Otherwise, they will run away from you. If you see the opportunities there, you can always step into that opportunities, talk to them about the opportunities that they have to have an ideal wealthy life using real estate investment. And so use all the networking way you can connect with investors, party gathering, open conversation that you can have casually here and there. Even if you're working in a building and there is a common area, and then people come there, hang around, and grab their coffee, you can easily open a conversation with them. I've done that successfully. I got many investors. Social media is another tool that is getting utilized more and more these days. You can be anywhere you want, Instagram, TikTok, Facebook, LinkedIn is a powerful tool. As I said, don't vomit real estate investment on them. Just casually talk to them. The way you can use social media here is through storytelling. So don't put for sales, sold, for sales. So the social media is not a banner for you to use. It's not a billboard. is as interactive tool that you can use. So be there and softly with a nice story, you're handshaking with a family is happy, there's a picture of a house, you tell them briefly what's happened here. You can always write in the description a paragraph of how you could help this family to buy one of the best property that would help them for a better future. Another scenario I use for my clients here is I bought properties for my kids when they were little, and I let the property grows in value. And then once the time was right, they are going to university. I sell that property. I give my tax. The money that I build up is so much that I can pay for the university, which is a true story that I always bring up. So in that sense, you have to be ready to showcase your expertise. People ask you different questions. You really know what you have to do for them. Now, therefore, you need to read more books. YouTube channel, use my YouTube channel if you want to. There are seminars, training. Some of them are free. Go to events, real estate conferences, webinar like this, happening all the time. If you can get a coach or mentor programs, that would be ideal because my very first home when I bought it, I was afraid. Even I wasn't a real estate agent at that time, but I was afraid of failure. My wife was saying, "Don't buy a house where we can find a tenant. Tenant comes, destroy the house." I was hearing that from all the speculators. That horrible stories, scariest stories of how investors bought property and they lost money. They didn't know what to do. So I was reading books, I was going to seminars, and still, I was hesitating because I didn't know if I'm doing the right thing. I was afraid of so many things, negative things could happen. I lose my money. That's the biggest nightmare someone as a brand new investors could have. So hopefully, thankfully, someone hold my hand and said, listen, enough is enough. You over calculated your numbers. All the numbers are making sense. The only thing you have to do is just, with faith, step into the pool and start swimming, which I did. A week, 2 weeks, a month, 2 months after, I was rolling. I was after the second one, third one, etc. So that was a very successful recipe that I used. So if you're looking for a coach or mentor, that would help you to get into the actual real estate investment world faster. So if you can help your buyers, investors, that would be great. And be caring, be honest with them. If you see a bad property, tell them why this property is bad, and then they would really appreciate your help. Any questions so far?
I have a question for you.
Go ahead.
You said in an earlier slide that most investors are cash buyers.
Not most of them. I said they are financially secure. They already did their calculations. They know what do they do. In comparison with the first-time buyers, I am getting calls every day as a first-time buyers asking to send them some properties. And when I open the conversation, telling them, "Have you looked into your mortgage?" Because that's the first step. Oh no, we haven't. We don't know what. Okay, so you're not wasting time with investors. They already know the numbers, so they know what they do. So
Where are they getting their money, do you find?
Pardon me?
Where do you find they're getting their money to purchase?
Some of them, they have cash available in the bank. Some of them are getting home equity loan.
Okay, so a lot of people are they're leveraging their current property through a home equity line of credit, or they just have a ton of savings.
Absolutely.
Are they older in life? Like, why do they have a ton of savings? Where did they get their savings?
I think that was through some like business transactions. They accumulate their money or they're saving for. Listen, usually they are not 20 years old. Sometimes with the help of their parents, yes, but majority of them, they are easy over 35 and up. You can have a mature conversation with them. I have few cases of younger generation.
They've got their money from their business, like they're business owners, or they're
some of them are business owners, some of them are working. for their company or another company, but they save their money. That's their sweat equities money that they have.